So when we look at the year overall, I think to start at the very high-level macro point, we're looking for a global economy to support the auto industry this year. It's our expectation in partnership with Oxford Economics, kind of using their macro drivers to drive our forecast top line. We're looking at GDP growth that's a little bit slower than last year, but globally around 2.7 versus 3. So we've been at 3% for the last 2 years, so a little bit of a pullback, but still a very favorable level of economic growth. When we look then at the auto market, we're looking for a market, so coming off of 2018, which did decline, the first pullback in volume since the Great Recession. So that is obviously a significant point, I think, and probably has the industry a little bit concerned given some of the uncertainties. But when we look at the market and look at really the drivers of the market and the health of the market, we're really looking at a market that's going to be flat to slightly up. The 4 areas that we're focused on from a risk standpoint, I touched on them briefly, but it really is sales momentum. So we're watching that mainly Western Europe, the US, and China are the 3 main areas that we look at as potential concerns there. Next up would be tariffs and trade. Obviously a big wild card. China's been the focus of that, and of course that impacts the industry, it impacts the economies both in China as well as the US. You heard some of the profit warnings coming out of companies like Apple and the stock market taking a lot of attention with what's happening with that. But I think when you look at the auto industry on a tariff standpoint, for us, it's the European negotiations that I think are more important to pay attention to. And some of the issues related to that, I think, affect volume here in the U.S. much more. For example, just some of the analysis that we ran, if you put a 25% tariff on the imports from the EU, these are primarily premium brands. The impact could be as much as 250,000 units, 250,000 units in the U.S. Not to mention the impact that would have on the economy in Western Europe and production volumes in Western Europe. So I think that's the one more for the industry to watch. China is obviously important and sets the stage, but I think the tone of the EU talks is certainly going to be important. Spilling from that over to Brexit, Brexit obviously is another big wild card. Understand as I was traveling here, Theresa May survived her vote of confidence for the government, so not by a lot, but she's still in power, and the negotiations will continue. It's funny, we're a UK-based company. We're based in Oxford in the UK, and I sent our managing director a note today, and this is a prediction from an American. And I said, Theresa May will survive the vote of confidence. I said the Brexit extension that's expected, so the UK is expected to leave in March. That'll get extended. There will be a second referendum, which will put it back to the voters. And the UK will not leave the EU. So that's not our official forecast, but I think that's certainly plausible at this point. So we'll see how it plays out. I think there's a lot of risk associated with that. The risk has been downplayed from a global risk to a European risk to really a UK risk. It's mostly centered in the UK. Obviously there's trade issues going on with the production facilities that are in the EU that are then sending vehicles to the UK from a volume standpoint. But the volume risk is almost all exclusively concentrated from a sales standpoint in the UK. Lastly, I think is when we look at maybe less this year, but kind of into the future, is what's happening, on the regulation front. Looking at the CAFE midterm review, obviously there's been a proposal to freeze the standard. California and the other states on the East Coast don't want to participate in that, so there's some battling going on in a legal sense in that space. So I think those are some issues to pay attention to. Last year, China accounted for over 60% of all full BEV or battery electric vehicles. Volume was almost 800,000 units in China alone. That eclipsed the U.S. was a little under 200,000. Western Europe was about 175,000. So China is obviously the leader in that area. Again, it's a regulation and a government focus and a push. Development continues to take place in the U.S. market. For example, last year there were 15 EVs on the market. By 2022, we expect 90 battery electric vehicles in the marketplace in just a few short years here. So pretty strong expansion of product. The question is, will consumers buy them?